let's connect with Mr. Pradip P Shah, Chairman of IndAsia Fund Advisors. Pradip, good morning and thank you for joining us. Pradip, so far so good. Markets are holding on, cyclicals are making a comeback, breadth is improving, GDP has expanded and CAD has contracted. Looks like springtime is back?
Well, we have to count our blessings. Certainly the current account deficit reduction is a good sign, but and the currency stabilization is a good sign, but that currency stabilization is something we need to keep watching. And the monsoon demand is something which will spur our economy a little forward and benefit a large number of people in the rural areas. Also, it will help contain inflation. But we need something to re-energize growth. That is what we are lacking. And I think there, perhaps the central government may not be as effective today given the circumstances. But we need perhaps the leadership of the Reserve Bank of India to in effect kickstart a higher plane of growth, and that may come through interest rate reduction. It sends a signal in the first place. I think we've unfortunately increased interest rates, and then that leads to consumption slowing down because for instance, people who borrowed money have to pay higher EMIs, so they cut back on discretionary expenditure. It leads to reduction in investment expenditure and so on. So we need to start by a trigger which is simple to execute and will not hurt inflation by reducing interest rates and sending the signal to the markets.
Pradip, what is it that you're sensing about the market mood ahead of the state election result? Could it be a make or break if indeed it isn't a BJP victory in at least 4 of the 5 states?
No, I don't. I think the trend may be it's very clear if there is 4 out of 5. But even if it is less, it does suggest that there is a move towards a more stable government perhaps, and therefore perhaps more decisive governmental action, which we have not seen in the recent past. And if that comes about, even with a coalition, but perhaps led by a stronger dominant partner in the coalition, I think we will see progress. What we don't want is a completely fractious coalition which is effectively unworkable. Somebody may form a government, but it will not be stable. That will lead to chaos, and that will lead to lack of confidence. And I think we will have to wait till December 8 to get some sense of it, but that December 8 may not be as conclusive as we would like. I think the events unfolding beyond that will probably give us a pointer to how the election results will unfold.
Pradip, of late, cyclicals have seen a strong comeback. Metals, engineering companies, PSU banks, some auto names. But as the year unwinds, do you think traders and investors would rush in to lock some gains, and one is better off either avoiding cyclicals or slip or pulling some money out of them?
It is the nature of equity markets to anticipate improvements in such areas, and improvements will come, but there will be disappointment in the next few months if, for instance, the politics doesn't look good, if there is some economic hiccup. It will suddenly look as if the cyclicals will take a little longer to come back into form. And certainly we see that there is greater evidence of overcapacity in the cement than, for instance, last year. But if there is understanding, if there's some kind of price and production arrangement in place, and then that happens, that shores the prices of cement, and then you see suddenly the cement stocks do well. But that's more difficult now with the Competition Commission keeping an eye on it. So what we need is a spurt in demand, and that will come about with interest rate reduction, with a better sentiment coming from better politics and lower interest rates, and hopefully currency stability. Now, currency depreciating helps some of our cyclicals, such as, for instance, steel and so on. We become globally competitive, imports become more difficult. But overall, we would like not currency depreciation to bring about a feel-good factor in some of these cyclicals. We want domestic demand to increase, and that is what we should strive for.
So by that view, is metals also a favorable sector then at this juncture?
At this juncture, because I think at 62 rupees to the dollar, certainly import sensitivity of those sectors has decreased. We are much better off. we certainly can see a revival in demand come about. Our automobile industry is down, but if, for instance, we see interest rates come down in addition to this monsoon demand, then we'll see two-wheelers, four-wheelers, tractors demand pick up, and then that will spur the automotive industry. And not only the steel, but also the automotive components which is a very large industry, by the way. And so we are already seeing some sectors do very well currently. For instance, the export sectors, whether it's chemicals or textiles or leather or, of course, software services, they are doing very well because partly of the currency, partly we have made a thrust on getting some more business in some areas. And if we can then spread that through domestic demand for the domestic-oriented industries, I think we should do better. So the regulators, the Reserve Bank of India, the central government should concentrate on that. And inflation, we have to address through supply-side measures, not through tight money policy.
Pradip sir, out of the three themes what currently markets are betting on, number one is rupee, stroke exporters. Number two is rural, which is FMCG and some auto stocks, and the third is recovery, which is cyclicals and some machinery stocks. Which to your mind will be the most powerful theme for 2014?
I think recovery. It will be the recovery in the economy, and I am confident that we will have a better coalition government, if not a single dominant government led by a single party. And if that happens, automatically I think there will be some progress towards reforms. So for instance, we are seeing a kind of government that is handicapped and very conscious of the imminent polls. And so it is much more involved in giveaways and social sector programs which don't add to wealth. I think what we need to is to bring back that sense of discipline in the fiscal regime and kickstart growth then through investment programs and making conditions better for investments to come about. Just to give you an example, we are seeing, for instance, the tax administration of foreign direct investments so ridiculous. The notices on, for instance, Nokia and Shell and so on are extremely ununderstandable. Why would you tax capital flows into the country in the name of there being underpricing and so on? There's some inconsistency there. You want foreign direct investment? Make the tax regime fair and efficient. Here we are being unfair and inefficient and discouraging capital inflows. So we need to do simple things like that, or for instance to increase savings. Look at the kind of form filling that we have to do. Even if you are a bank customer, if you want a credit card, you have to fill up 4 pages of forms and 6 signatures and so on. Or if you want to open a demat account, you want to go and buy something in the financial markets, you have to fill up forms again and again. Make it simpler. KYC or know your customers is not a holy cow. You need to improve on that. Now these are easy to implement. These are not rocket science.
Fair point. Simplification, I think, is the big mantra going forward. So, Pradip, the big event is May 2014 when we are pitted against general elections. But that's 6 months away. How do you see markets, shaping up, moving up from here to the run-up in the run-up to the elections?
My feeling is that there will be ups and downs. I think there will be disappointments, there will be uncertainties, there will be fear of everything, including from currency to politics to waywardness in the economy. And that will lead to ups and downs. There will be optimism also because, for instance, if we see some new inflows of foreign direct investment or we see some trends very visible in the politics, then there will be, or at least perception at that time, you will see some positive moves in the market. But basically the uncertainty will prevail till I think the political situation reveals itself, and that will come only around May, June.
Pradip, the other unknown for 2014 is tapering. A lot of opinions are floating around on when tapering will start, what tapering could do. What is your personal opinion?
I think tapering fears are overdone. Firstly, if tapering starts, it means the US economy is doing well. As it is, it's doing well. You see even this, for instance, the Thanksgiving and Black Friday sales are higher than last year if you take on a large 15 trillion economy. It's wonderful to hear that. Japan is doing well, helped by the cheaper currency. In Western Europe, UK definitely is doing well. France and Germany have a bit of a sluggishness in growth, but they're still growing. It's not as if they're not growing. So we have a global environment which is benign, and if then tapering takes place in a calibrated fashion, I think we can live with it. There is no problem. I think what we have is this opportunity to piggyback on the monsoon being excellent to further grow our economy. And that is where the focus should be today. Fighting inflation with monetary policy alone is not the answer.
Pradip, what's the sense that you're getting about the mid-cap end of the market? Because that is so undervalued in today's day and age. A lot of people are betting then on the broader end of the market outperforming whenever the market were to recover. What themes and sectors do you like?
No, so you are absolutely right. The mid-cap sector offers humongous opportunities. We are seeing excellent fundamental values in the mid-cap sector. We will see money flow into it, but unfortunately what happens is that the big funds don't run into mid-caps, but they don't run into mid-caps because of liquidity issues and so on. So we need to have domestic institutions also step in, and domestic retail will come in following these institutional leads. But there is definitely fundamental value in the mid-cap space.